Well, the markets have closed with the sound of the bell, and today on the program we'll be hosting Harrison Gitau, who is a research analyst at ApexAfrica. Many thanks for joining us, Harrison.
Thanks for hosting me.
Well, just to start us off, seeing the NSE 20 share index, it's actually down this week by about 3.21%, closing off at 3,519.78. What do you make of this?
There has been a lot of foreign exits as investors now try to look for, especially foreign investors, as they try to look for more superior returns outside the Kenyan market. Yeah.
And Harrison, let's take a look at, of course, the top movers. This week, we're not seeing Safaricom among the top movers. Yeah. We have a surprise entry, that is Athi River Cement. It's moved about 9.6 million shares, and this is quite peculiar for the cement industry, bearing in mind Athi River had actually issued a profit warning some time back.
Yes. For Athi River, there has been quite some considerable exits from institutional investors who had actually come in at very high prices in ARM. So whatever they're trying to do is they're trying to cut their losses, accept that they have actually suffered some dents in their valuations, and they are exiting. Now, on the flip side is that we have some retail investors who are seeing ARM at about 3 shillings, still has a lot of value and still has a significant upside. So they are willing to take the gamble, and they're willing to come in and actually pick up the shares that are being dropped by the institutional clients.
And still staying with the matters, the cement industry, we did see even Bamburi, which is actually one of the leading market players, and their numbers were not that good. Yeah. And from where you sit, where are we headed to, especially in the construction sector in the country? Of course, we did have a lull during the election cycle.
Last year was actually a dent in the trend that we have been observing of cement consumption. Cement consumption actually declined by about 8%, which basically was a one-off. But this year we are expecting a return to normalcy. So we expect a reversal of the same.
And what informs this, Harrison?
We expect a rebound in government investment in infrastructure, given the president's motive of fitting and actually hitting the Big Four agenda. So we expect that to sort of rack up cement consumption. In addition, we also expect the private sector sort of increase cement consumption compared to last year, even if we are still experiencing the rate cap, which has dented the lending to the private sector.
All right. Interesting insights there. And Harrison, let's talk about Cooperative Bank. They did release their results this week, reporting a profit after tax of about 3.4 billion shillings. And they've attributed this to the issues around the asset return on investment. And of course, the rate cap did not heavily expose the bank, but they made a whole amount of money really from government securities. And looking at the banking sector, Coop Bank is one of the leading banks when it comes to the ordinary mwananchi, if I may say so.
For Cooperative Bank, they recorded about a 6.8% increase in net earnings. And you could see that their non-funded income went up, their interest income went up. And basically, those are signs of a bank that's really trying to cope with whatever is happening with the rate cap. Their non-interest income went up because of government securities. The exposure in government securities actually increased, which is a trend we have been observing of very many banks, because they are slowing down the lending to the private investors.
All right. And Harrison, let's shift gears now and talk about the top gainers this week. I'm seeing TransCentury, it's up 10.71%, share price at 4 shillings and 20 cents. We also have Stanley Fahari, which is also doing well. It's actually up 3.91%. But let's sort of dissect TransCentury. It's been a company that has been having a very interesting run in the market. It has its ups and downs. And right now we are seeing some sense of stability on this particular stock.
I would not read so much into TransCentury's price appreciation because it's on thin volumes. So it's basically a market plays. there's nothing that has changed. I believe there's nothing that has changed for TransCentury fundamentally. So it's basically ups and downs,
all right,
as you had mentioned. Yeah.
Ups and downs.
Yeah,
Talking
and
about downs, top losers this week: Athi River Cement, Deacons East Africa, East African Cable, CIC Insurance. But Deacons continues to feature prominently among the top losers. And we are seeing the stock is actually down by 15.79%. Valuation has also gone down. It's now at $1.90. And as you close off with the top losers, what's the story behind Deacons East Africa?
For Deacons East Africa is mainly the decision to exit from the brand that is Mr. Price. They're still looking for another global firm. They haven't come out and said we've gotten one. So investors are sort of cutting their losses and sort of accepting that without Mr. Price, Deacon's top line is actually affected. So they are looking for investments elsewhere, maybe looking for counters that have actually good dividend yields at the current prices. So that's why they are quite significant exits.
All right. Many thanks, Harrison.
Thank you very much.
Well, it's indeed interesting to get the analysis. As always, it's now time for us to take a look at Markets 101 for this week. Well, it's time now for my favorite segment, and that is Question on the Street. Let's take a listen in on what's up for this week.
My name is Caroline Joroge from Kiambu County. I love to know what is a dividend.
Thank you very much for your question. I think the interest on what dividends is has been raised by the current earnings season that we've just left. But basically, dividends in simple terms are payments that a company makes to its shareholders. Commonly, what we've seen in the country is that dividends are paid out in form of cash, but they can be paid out in form of shares, which are bonus shares, or which are shares and cash.
Well, we do hope that your question has been satisfactorily answered. Many thanks, Harrison.
Thank you very much.
Speaking of dividends, what's the biggest dividend you've ever received?
It has to be Kenya Power.
All right.
Because they pay 50 cents and the price is quite attractive. So at a dividend yield of about 7.5%, they are close to competing with banks.
All right.
Yeah.
I hope you didn't go to Mombasa with that dividend payout.
Just brought it back to the market.
All right.
Yeah.
Well, Harrison, as we take a pause on that, let's take a look at the other segment we have, and that is the historical fact for this week. Well, that's all the time we had for here on the Trading Bell. It's always a pleasure getting the feedback from you. We do hope that you've learned a lot when it comes to credit sharing and what the role of credit bureaus are here in the country. Well, keep engaging with us on our social media handles. You can follow us on Twitter using @KT News, or you can tweet me @AginaAbi. Remember, you can also like our Facebook page, that is the Trading Bell, and we'll definitely appreciate your feedback on the same. Well, from us and the entire team, it is bye-bye for now. Have yourselves a lovely weekend ahead. Thanks, Harry.
Thanks.
Pleasure having you.